Hello and welcome to the Stock Planner channel. Today, I'd like to talk about Facebook and maybe offer an alternative play because Facebook is very expensive, trading over $300 a share. People with a small account won't be able to trade 100 shares, and that will restrict some of their strategies that they can use to successfully win some money. This channel is about swing trading. Get it, the golfer swing. We're not taking ourselves too seriously. We're learning from each other. It's an educational channel. I'm not your advisor or guru, but I do think we can learn from each other and pick up a few techniques. I think I'm going to offer you one today. Let's get started. Facebook has over 2.8 billion active users. It's a huge company. It's a leader of the pack in social media. It's a wonderful company. You have the ability to talk to old friends around the world for free. I've been able to connect with some old classmates, high school classmates, and I'm going to my reunion in September. And also, I've been able to connect with some of my travel friends all around the world, all for free. Wonderful. Facebook has a marketplace that lots of people are using locally to sell items, and you can use it around the world. Facebook Marketplace is ever growing and more popular. It's a great place to sell stuff. I'm in the antique business, and I have sold on Facebook Marketplace and bought. Being able to connect with old friends around the world, sell things, market yourself, is a sign of a true social media giant, which Facebook is. It'll be here around and around for many years. It's the big boy in the block. So what is it there is not to like? Facebook is investing heavily in virtual reality in order to market their video games and market their other retail endeavors. Can you imagine being able to visualize a product or take a house tour of an apartment that you maybe or a house that you're ready to buy virtually, and actually see the rooms and walk through the house or walk through the store? Right now, a lot of the popularity lies in video gaming, but that'll soon change. Facebook, Google, and Amazon will be leaders in virtual reality. The military are using it for training, and healthcare is using it to do virtual operations on patients, and that way you can practice without having to kill the patient. It's really wonderful. There's a lot of possibilities in training and education. Soon it'll be in our high schools and elementary schools as we go into more online training. But there's certain aspects of Facebook that I don't like, even though I know that they're going to be the leader for the next decade in social media and virtual reality. And that is the fact that there's so many users, they have so much control over, that they have started censoring certain political voices and certain news that they don't want to have proliferated, and people are angry. They've instituted this Facebook fact checkers, but a lot of people don't have any faith in them. And then it seems like every month some of my friends are being hacked. Very irritating. And I believe over the next 10 years, people will be very concerned about privacy issues. In other words, when you look at a new camera, the next day you get 10 or 15 different ads from Google and other places on those items that you looked at the day before. I think over the next decade, people will be concerned about protecting their data and their information. And there's even talk about charging Google and Facebook for your data. In other words, they pay you for your data. It's an interesting concept. And I truly believe that Facebook will not continue to grow their user base and their revenues like they have been for the last decade. There's going to be some challenges. There has been a lot of users leaving Facebook since the censorship issue. And it's now a new concern of this privacy and preventing hacking. Facebook needs to do a better job. And I've lost faith in Mark Zuckerberg. I don't think he has my interests at heart. It comes across as arrogant. And while he was a brilliant technician and programmer, I believe that a new CEO and leader is needed. And there'll be some headwinds based on people's shopping habits that have occurred since COVID-19. Our economy is not as good as everybody is saying. And I believe the next 2 years, it's going to be tough. for any small business, of which Facebook is very, very adaptable for small business, and use, again, that marketplace. Facebook marketplace is wonderful for small business. You all seen it. There's empty stores all around. You don't need to market empty stores. Big retail spaces are going to have some problems to be filled. The good news is people will turn to the internet for their shopping needs. Amazon's not going away. You need an online presence. Every business that's going to survive needs an online presence. Closed. Another headwind that Facebook and Google and Amazon will be facing is a repeal of Section 2030, which offers protection about publishing third-party comments and the responsibilities of the publisher. Right now, there's no responsibility of the publishing, but since the censorship issue came up, people are saying that Facebook is acting as a publisher by censoring. I think Facebook should be a place where free ideas are freely exchanged without the risk of censorship. Inevitably, I don't know what's going to happen with Section 230, but these companies, Facebook, Twitter, and Google, are going to pay hefty fines. In conclusion of this portion of the talk, I do think that Facebook's going to be around for a long, long time. There's no replacing it. I'm going to offer a stock that has the same growth rate as Facebook, as maybe an alternative, but it's not a stock that would replace Facebook. There's no replacing it. So with that in mind, knowing that or believing that Facebook is not going to grow at the rate it did for the last 10 years, let's take a look about how we can make some money and what we can do. Of course, we can look at some virtual reality stocks, and I didn't do that today, but I've looked at some facial recognition type companies, which I have done today, with the thought that perhaps maybe Facebook will eventually buy this company, but with the knowledge that security and privacy is on everybody's mind. In a couple of weeks, I'll look at a virtual reality company and do this thing again. Facebook needs to beef up its security. Facial recognition is one area that it can help and improve the security of its customers. Now let's look at some company fundamentals. Looking at FinViz, we see that since February, Facebook is on a tear upward. This is decline here is when everybody was leaving Facebook because of the censorship issue. And then Amazon shut that company down and things started improving. Facebook just doesn't seem the same since then. But it is quieter since Free Thought has been shut down. But it's a private company, so Facebook has the right to censor whatever they want at this point in time without any controls. Anyway, the target price is $386 according to FinViz. $386 is up in here somewhere. $361. That's a red bar here today. Facebook is down a bit. It is definitely profitable. They have lots of cash, and the forward PE is going to be great too. But it's probably overpriced. Downgrade, but it didn't really matter. And all kind of news every single day on Facebook. Yeah, it's down $2.47 today. Tip ranks. Another place I go to has a strong buy on it. The average is $3.90. Currently trading at $3.52. That's a good chunk of change there. Growth with a high of $4.60. $4.60, $3.90. Remember those two numbers. Putting that in my little analyzer. $4.60, $3.90. And if it gets there, based on today's price, it would be a 23% yearly increase. In other words, if you invested it today, and 1 year from now, you'd have a 23% rise. And you'd have that much money in your pocket. This is on a $1,000 investment, which will give you about 2 to 3 shares of the stock. Buy and hold, buy it now. Believe the analyst predictions on TipRanks or some other news investment channel. But the average is showing around 10%. It's got a 10 ranking. Hedge fund activities increased. Look at all this green. This is a company that everybody likes. Everybody loves Facebook. Hyped stock. MyTech develops, markets, and sells mobile image capture and digital identity verification solutions in the United States and Europe, South America. We can allow a company that's dealing with the marketplace sales to validate and verify the user. It uses facial recognition, scanning and lots of other validation techniques. It makes the transaction much more safer. It sells to banks, credit unions, any kind of payment processor, heavily into privacy and security issues, but known for its facial recognition. This is a stock. It's trading back at its all-time high again. Today was down a little bit. Red candle, just like a lot of the techs today. A target price is $22.13 according to FinViz. $22.13, which is up in here somewhere, is profitable, and it is optionable and shortable. That's something that I always like to look at, and it's got a buy rating. Let's see what TipRanks has to say about it. 1883, target of 22.13. That's an average, and a high of 25. 22.13. Strong buy here. And let's see what the ranking looks like. It shouldn't be as good. Yeah, it's a 4. Okay. Hedge fund activity has increased. We like to see that, but not very much news out there. Let's see. It says it was bearish. Legal problems. Digital identity verification. Well, let's remember 25 and 23.13. Let's go to our spreadsheet and putting those in there and the current price. And we come up with a APR for a buy and hold. Remember now, we're investing the same $1,000. Same $1,000 here and here. And because you're doing an $18 a share or $19, you're able to buy 53 shares versus 3. And if it does its prediction, which is roughly about the same amount here, you're getting roughly the same amount here. So in conclusion to that, a buy and hold strategy for either one is relatively the same for the highs. The average, you'll see that my tech is a little better, but these are just numbers. These people are no better than you and I. They're just guesses out there where it's going to go. Now, they do have some knowledge, and they're able to pick up the phone and talk to people where we don't have that ability. But in the end, they're going to make some kind of guess. So you believe what you want to believe. But I do believe that both of these companies will grow at around double digits, but at least 10, 15, 20%. And you can expect that. Both companies are growth stocks. Now I want to look at whether doing some swing trading will work using these two stocks. In other words, buy and hold, roughly the same. You might as well go with the better company than MyTech, the more versatile company. So buy and hold strategy, if that's what you're going to choose, I would go with Facebook. This is Facebook with a daily time frame using TradingView. Is Facebook a swinging stock? Take that swing there. If you got that one, you would have made some money. If you got that one down, you would have made some money. If you got this one, man, oh man, you would make some money. This is the zigzag. It's a forward-looking. The zigzag. It's a forward-looking, future-looking indicator. It's always right because it looks into the future. So you really can't trade it with this line here. Zigzag knows what it's doing. It's still saying Facebook was going up, and it's not changed its mind. We like to take action when the zigzag doesn't know what it's doing. But right now, since you can't trade with the zigzag, you can trade with indicators. And right now we got an MACD down, saying it's going to go down. We have a stochastics the day before saying it's going to go down. And we have the RSI saying it's gone down about a day before. So these indicators are all saying down. Yet we're believing the analyst, which says it's going to go up. And so we would try to look for an indicator out there that gives some buy signals. So this is the MACD. Let's just take the last three. Did that give us a buy? Yeah, you would have made some money there. Did that give you one? Certainly made some money there. And did that one? Certainly made some money there. Or stochastics RSI here. When it comes down about below and comes around the 20, those two would have gave positive things to it. And the RSI, which is one of my favorites. The RSI 4, when it's below the 30 and comes back around, there's none here, or above the 70 and comes back around, it gives you a down. But we're only looking because we're believing what the analysts say, that it's going to be growth. It's going to increase. By the end of the year, it's growing, let's say 400. So every time we get a signal, as long as it's below 400, and we believe it's going to go to 400, we're eventually going to win. So if we get a signal, I'd like it to last 10 or 12, 14 days, 16 days. That way I can do an option play if I wanted to, or a buy swing trade and in and out. And 18 days, if it holds true for 18 days, I have a lot of opportunity to get out earlier when I hit 5% or 7% or 2%. A lot of times I just do a trade for 1 or 2 days at 2% profit. So if I backtest, I would like to try to backtest using basically an RSI turn on, and the MACD is above the 0, and the stochastic has come swung around. I'd like to get it all within about 4 days of each other and then take a trade. In other words, all 3 of these things occur within about 4 days of each other. So I'm going to run a routine that I've programmed and backtest it for 1 year and count them. Looking at my tech, it says it's going to go up to 25. That's a high. 25, way up here. So if we truly believe it's going to go to 25, anytime we buy it at here or here, we're going to have a winner eventually because we believe it's going to go to 25. We believe the analyst. And this is swinging. It has a lot of minor, smaller swings. You have to be careful with that because that means it's switching back and forth. And keep an eye. Zigzag does not know what it's doing here. It looks like it would be a downtrend, but we believe the analyst and says it's going to go to 25. So we're waiting down here for the greens. If we did a green here and a green here, I like them below the 0 line, so I don't really take those, but you would have got it in here and would eventually win. I got here. It's a winner here. So I could take them below, so that would have been there. And opportunities to win, but it was switching back and forth there. But if you bought here, you certainly are winning now. 16 to 18, 19, that's $3. If I have 100 shares, that's $300. Again, I'm going to try to find an indication where the RSI, the stochastic RSI, and the MACD are all telling me to buy, and then hopefully it'll hold for 18 days so I can make a decision. Let's do a back test. I'm using a program called OmniBroker, and these are the same things. This is your chart. Here's the MACD. This is your stochastic and your RSI. And this is your zigzag. Same thing as in TradingView. I'm going to test it for 1 year back, July 1st, 20, and we'll run a back test with a $10,000, $5,000 account with a $5,000 margin, taking a trade of about $1,000 each time. And we got 1, 2, 3, 4, 5, 6, 7, 8 trades. N bar, it hit the N bar, and that is 18 days. So once I get a signal, I wait 18 days and get out and see if I get a profit. And there's some losses here and some profits. But I'm trying to see if it holds true for at least 18 days, which gives me a chance to do an option play if I want to, and also make a lot of decisions on whether I want to ride it up, take a profit at 3%, 2%. Well, it says I started out with $10,000 and ended up with 212, 8 trades. Every time I made a trade, I won $25, $26, and I held it for 19 days, which is about a month, a little longer than a month. There's 22 trading days in a month of 18. So I can do 12 of these a year and have or just do one and have the money the other 11 months. The risk adjusted is 32%. And remember that, 32%. And my win rate is 50%. Putting those things in there, I get 32% at risk adjusted, and I get 216. And 32% because I have my money to play with. I had 8 trades in 1 year, so I had 4 months where I can play my money elsewhere. 32 is better than 23. So swing trading is the way to go. And I have my money to be able to apply somewhere else. Now, even though the number here is less than this number, I have money available to me for 4 or 5 months. So you definitely can swing trade Facebook using about $1,000 each trade with a small account. Let's do my tech real quick. Using the same conditions, running a back test. 1 loss here. So that means we had 7 or 8 winners, and we ended up with $848. That's much more. I like that. 2 losers and 5 winners. 7 trades altogether. Each time I put a trade, I made $100. $21. Hey, I like that. Ended up with 848. Risk adjusted was 146. These are all good news for the smaller priced stock. Putting those in my spreadsheet, there's your risk adjusted, and there's your total. This is better than this, and this is better than this. So I do believe you can swing trade both these stocks using the same $1,000, but my tech, based on my trading strategy, did better. So it's important to have a trading strategy that works. Yours is different than mine, but backtesting an RSI MACD strategy seems to yield results for this alternatives non-hyped stock. Facebook is still good, but I'd rather have this. Now, back to my tech. Back to Facebook. If you received a signal somewhere in here, and here, and here, and here, and here, and you were able to do a play that would allow you to place a bet $1 or $2 or $3 or $5 under the current trading price with the hopes that it would stay up above that line, would you do it? Based on this scenario, well, of course, the hindsight's completely 100%. But if you believed that this stock was going to 480 or I think it was 460 or 480 because the analyst told you so, and you knew it was going up there, and you were able to buy at certain points along the way, you can't really lose. Now you might lose you might have this come back below, but what the option is, we're going to sell a put, which means we have the option that we're giving somebody else for a price, the option to be able to put the stock to us at this lower figure. In other words, if the stock went down, they could put the stock to us at this lower figure, and we'd have to take it. And then because if stock is trading down here, we'd lose money. But if the stock went the other way, we get to keep their money that they paid us for that put. We're going to sell, for example, to somebody out there the right to put the stock at 250. We have to take it at 250. And the stock is currently trading at 260. We have to buy it at 250 at some future time, 18 days, 18, 20, 30 days from now. Anytime during that time, they can put the stock to us at 250, and we have to take it. And to give them that right to do that, we're going to sell it for a premium. Again, the stock is going up, and if we do this at certain points along the way, the likelihood that we're going to get hit is going to happen, and we have to take possession of the stock. When that happens, when the stock price comes down below and it gets put to us, we have to take possession. And because this stock, we have to buy 100 shares, and because this stock is trading at 360 at the moment, that is what? $36,000. Do you have $36,000 in your account? Well, I don't think so. Not everybody that's watching this one has $36,000 to take possession. So that's why we have to use a smaller stock to do this trading strategy. Let's take a look. So currently, this is Facebook, and the August 30th, the 6th now, so August 30th, the August 20th is about 32 or 35 days. So I'm not figured it up exactly. And that short put, 330, it's now trading at what? 330 is over here. It's trading at around 352. So if it gets down there, we're going to have to take possession of this stock. And we don't have $30,000 to do it. So this is why you got to be careful trading this kind of high price stock. But all the margin all I need to do to trade this is have $6,000. That's what, because my broker is going to give me the opportunity to go ahead and trade it with only putting up $6,000. Still, that's a lot for a small account. You can only be able to trade for a $10,000 account. You only be able to trade one time. So a smaller. This option is not really trading options with Facebook with a small account is really just not feasible. The option premium, I didn't show you that, but the option premium over on the other chart was $6.42. I needed to have $5,700 margin and reserve if it worked out, which most likely it would have if you believe the analyst. I would have netted $7,000, nearly $8,000, which is about a 21% jump. At 21% is not better than this percentage, but you're only in the play for 1 month, and you have 11 more months to do it. But it's not possible. So it's not possible with a small account. Let's look at MyTech. So we're betting MyTech will rise by 3% by August 20th. 17.5 is right in here somewhere. So we're believing the analyst, and the analyst says it's going to go up to 25 or 20. We might have to take possession. If we do, at $17.50, that's $17.50, which is $1,750. A small account can take that, and then you can wait it out until the analyst is right, and they are always right, okay? Because they are the gurus. Now, I don't believe that, but I do believe they know a little more than I know. The trend of this stock has been up. I received $55, 55 cents, excuse me, to make this trade times 100, which is I'm gonna receive $55. Immediately put it in my account, and to do that, my margin is only $304. To place this trade, to get $55, I need to put up $300 in margin. I'm not really putting up the money, but I have to have my margin reserved. In other words, my $10,000 pot, $300 is being put aside for this trade. And there it is, 55 cents, $304 margin, gives me a 34%, 35% return. I can do this 12 times, and if I do it 12 times, I would have gotten at this percentage, $660. And 34.83 is better than 23. $660 is better than a buy and hold strategy of 304 for Facebook. It's also better than a back-tested indicator-based strategy for Facebook. Now, Facebook indicator turned out the luck of the draw with 848, but doing these option plays and having it doing 12 or so trades is repeatable, gives you consistent profits. So you ask yourself, you want to trade Facebook and get $304 for buy and hold, or $216, and for a small count, don't even think about it. Okay, this is not possible for you for a small count. Or do you want to trade a smaller stock that has about the same growth rate and get 324, or 848, or 660? I think the returns are better for MyTech, and that's why I choose the high growth small cap stocks. I'm going to show you one more thing before I end this. Facebook is 21% undervalued, and its future value, according to Simply Wall Street, is $449, trading at $354. So it's about $100 less. That's a good thing. You want stocks that are undervalued. This is 21% undervalued, and MyTech is 29% undervalued. So both these stocks are undervalued. That's what you want. You want them to be able to have a room to grow instead of overvalued, like Google and Amazon and Tesla. Those are not undervalued stocks. But I think pound for pound with a small account, MyTech is our better stock. What do you think? Are you going to be trading Facebook anytime soon, or are you going to look at some small cap alternatives? There's other ones out there. One of the stocks that I'm looking at is Unisys. Another one is Wish, although that's being hyped up right at the moment. And a stock symbol FEYE. FEIYE right here. Undervalued. I'm looking at undervalued stocks under $25, $30. That's not under. But there's Unisys right there. Western Union, which it's not singing to me. But anyway, I'm looking at other undervalued stocks in order to swing trade and do some option put selling. Okay, do your own due diligence. Choose Facebook or MyTech. Choose the expensive stock versus the cheap stock. Don't listen to people on the internet. Run your own race. Once you learn it, you'll make some money and probably win the race. But stay with us. Like and subscribe to this video and get some more ideas. I'm going to catch you on the flip. Happy trading.